Mortgage rates have dipped over these past few months, sitting right around 6.3%, down from the low sevens that we did see earlier this year. But will that even make a difference in the San Diego housing market? Today, we're breaking down what the experts are saying, what this means locally, and what this means if you are a buyer or a seller in the San Diego real estate market. So let's get into it right now. So will a drop in mortgage rates make any difference in the San Diego housing markets? So following a recent home price report, several experts pointed to affordability challenges instead of the usual suspects of interest rates as a bigger factor. Namely, that home prices have gone up so much since the pandemic without corresponding wage increases that mortgage rates aren't a gigantic factor. In a little bit too, I'm going to show you what different rates look like for, let's say, $1 million home right here in San Diego. Break down kind of what that payment is so you get a better idea. But I want to know, for you guys, if you're watching, if you're thinking about buying, is it affordability? Is it interest rates? Is it something else? Drop it down below. I want to hear what you guys are thinking, but here is what the experts are saying. First off, starting with economist David Eli from San Diego State, and he says, no, mortgage rates are just one factor prospective home buyers consider. High home prices are a barrier to renters wishing to purchase. Next up, Ray Major, an economist, also says no. Although a slight reduction in mortgage rates might make a few people who are on the margin able to purchase a home, almost 80% of residents in San Diego who have a mortgage have a rate below 6%, with many mortgages in the 3 to 4% range. So these people are a potential buyer pool, will not re-enter the housing market. So if you bought a house or refied, had a house and refied in 21, 22 when interest rates were super low, it's called the lock-in effect, was what a lot of people are phrasing it as. Basically, if you have that amount, so two things, interest rates have gone up and home prices have gone up. So why would you take your home that you bought for $500,000 and now it's worth 1.3 million and trade up for that next home when your interest rate's low, your mortgage is low, and everything else being equal, you're not gonna make a move. Next up, Caroline says, no, it will take more than a moderate drop in mortgage rates to change buyer behavior. People don't like to sell at a loss, so inventory remains limited. But despite limited inventory, housing prices are down in San Diego. And so if we pop over to home prices here, you can see we peaked out in June of 2024 at 931,000. Now we've kind of gone down and then tracked sideways, sitting about 890,000 as the median home price right here in San Diego. Now usually we see this peak up, go down every year, peak up, go down. But this year's peak in that June, July timeframe didn't go above last year's peak. So year over year, home prices are down a little bit right here in San Diego. Kelly Cunningham, once again, says no, monthly mortgage payment is a critical factor of affordability for most homebuyers. The moderate drop in mortgage rates is unlikely to significantly impact the housing market as prices have risen far faster than wages. Alan Jin from USD says no, the average home price in San Diego is so high that even a modest drop in interest rates is not going to make the homes more affordable. Now we have one yes. So James Hilton, UC San Diego, yes, mortgage rates are a key factor in affordability of monthly payments. When you're buying a home right here in San Diego, the biggest thing is your monthly payment. Now, obviously, mortgage rates are going to be a big factor in that. The lower the mortgage rates, the lower the payment. And then he says, although there was a brief period last fall when rates were lower, for most of the past 3 years, rates have been somewhat higher than they are today. There are other factors that are also holding housing back, but lower mortgage rates are a step in the right direction, and I hope to see more cuts in the next few months. Norm Miller says, no, California homeowners are smart, and most of those with mortgages, 66%, have rates below 5%. So once again, referring to the lock-in effect. Why are you going to sell your house and buy that next house for more monthly payments, higher mortgage rate, and higher prices? Now, a lot of people we've been helping recently have been people who are moving up. Maybe they have outgrown their house. They have kids. Kids are bigger. They need more space. So they are making moves right now. We've also seen people relocating out of San Diego who are selling their homes here for, maybe they've owned it for 10, 15, 20 years, maybe even longer, and they're moving to a place that is more affordable, but maybe they're getting some more land, maybe it's a different lifestyle. So those are some of the people we have seen moving right now. Also people who have had rentals for a while, now we've seen some of those people cashing out as well. And then we get into some executives. So Philip Blair said, yes, a moderate rate drop finally would have a significant effect on the housing market. It will allow a whole new batch of buyers to enter or re-enter the market. And finally, there is a substantial array of housing for sale beginning to open up. Austin from Wave Growth says no. Chris Van Gorder says no. Gary London says no as well. Other pressing factors affecting housing market affordability include the possibility that the U.S. may be entering a period of stagflation, inflation plus a weakening economy, and home prices are likely to stay mostly flat as there is low availability of resale homes and few additions of inventory. So like other places that we have seen prices drop more significantly in Florida, there's certain parts of Texas. Part of the reason is they have more inventory, they have more land. During the past few years, they've been doing a ton of building. So there's just a lot more inventory in the new build. Right here in San Diego, we don't necessarily have that. There's infill communities, there's a few new projects here and there, but as a whole, we just don't have that much new construction right here as far as single family homes, townhomes, condos. There's a lot more multifamily going up around town. But as far as purchasing homes, we're not seeing a ton of new inventory. So quick mortgage rate update from Mortgage News Daily. Right now, when I'm recording this, 10/14, we're sitting at 6.31%. So a little bit below where we had been tracking sideways here, which we've been monitoring the last few weeks. Last few days, we've seen a little bit of a drop closer to that 6.3%. And if we go back to 5 years, we can see last time we saw it in this range was back here in October, September, October of 2024. So just about a year ago. And prior to that, it was right around here in April of 2023. So we haven't seen this low of a rate for quite a while. Now we haven't been below this line for quite a while, since back here in mid-July when we were well under that, before interest rates did pop up to where they were. But over these last few years, like I said, there's not too many times we've been under this 6.3% mark. And boots on the ground, what we've been seeing right here in San Diego, as we're working with buyers and sellers right here in San Diego every single day, is definitely a more softness in the market. As we're seeing homes sit a little bit longer for our sellers, they're getting less offers and a little bit lower offers as a whole. Like I'm saying, this is all general. There's some homes that are going to demand multiple offers. We had clients actually looking at a home a few weeks back that was on the market for 1 day, got well over list. And this was well over the $2.5 million range. It comes down to location, how many homes are popping up in that neighborhood, is it unique? And I guess sometimes it does come down to price point. But right now, as a whole, percent of original list price received, let's go into the average. And this is, so $1 million house, is it getting $1 million bucks? Is it getting a little bit less? Right now, we're sitting at 97%. So here's the 100% line. Anytime we're above this, that's usually where we're getting multiple offer situations, because homes are coming on. There's enough buyers in the market to push prices up above their actual list price. You get some competition. And over these past few years, since mid-2024, you can see it dipping down a little bit, dipping down a little bit. This is this time right here is when we did see mortgage rates start to rise quite a bit. So we did see a drop off of a super competitive market the previous few years. And the number of closed sales is relatively low compared to years past. So over these past, not necessarily the super recent past, so September 2025, we had 2,072 closed sales in September. The prior year was a little bit lower at 1,885. And then in 2023, we were at 1,775. So a little bit more sales than we did see in 23 or 24. But anytime before that, as you go back into all the way to 2013, you can see most other times it was above this, meaning we had more sales than we did right now. And then these last few years is when we've had somewhat of a drop off. So less buyers in the market, less homes on the market. All in all, it's been a little bit slower of a real estate market as far as the number of sales out there. If you guys want to know exactly what's happening in your neck of the woods and get the most recent market report that you're seeing right over here, including new listings, pending sales, closed sales, days on market, etc. Like I said, every market's a little bit different. Every zip code's a little bit different. Even every neighborhood's a little bit different. So what we're saying as a whole in the San Diego market could be a little bit different for your specific area. But if you guys do want your full neighborhood market report, just click that link below right in the description and we'll get that over to you. All right, so now let's check out the Fannie Mae Home Purchase Sentiment Index and see where we are right now compared to years past. Right now we're sitting just over 70 on the index. And so we're right about where we have been in 2024, in 2023. We're not seeing a big drop off like we did here in 2022. Once again, this dip going down to just under or just over 55. This is when mortgage rates saw a big increase, causing the home purchase sentiment index to drop a lot. The Fed was raising interest rates super fast, and so we got this huge drop in the sentiment. Now, previously, you can see kind of when the market was super hot in 2021, parts of 2022, it was well into the 80s. And then back in 2011, all the way until early 2020, we did see a rise, kind of a trend going up in the home purchase sentiment index. So people were okay with purchasing a home. I'll show you what's all included in there. And here are the 6 components of the home purchase sentiment index: buying conditions, selling conditions, home price outlook, mortgage rate outlook, job loss concern, and change in household income. And we can see where we were. Is it a good time? Is it a bad time? Net good to bad. So now starting with buying conditions, 27% say it's a good time, 73 bad time. So net is saying it's a bad time to buy. Selling conditions, good for 57, bad 41, net 17, good. Home price index, only a handful down, a lot are saying up. Mortgage rate index, go down, go up. We're sitting at a net 2 go down. So a little bit that they are saying it will go down. Not concerned of job loss, net 50 are not concerned. And change in household income, significantly higher, 14%, significantly lower, 8%. So net significantly higher. All right, so let's break this down and show you what it actually looks like to purchase a home right here in San Diego. Let's go with that $1 million price point, flat level, just so you guys could see the numbers. And the mortgage rates are going to be different. Like I said, the mortgage rates we look at on Mortgage News Daily is just the average. Yours can be different. If you're looking at the bottom here as well, you know, there are going to be all different rates depending on what you're looking at, depending on what programs. If you are thinking of buying, or maybe you have to sell and then buy, I think one of the best steps is talking to a lender first. Pick their brain, get their idea, and they're gonna break down all these numbers for your specific situation so you get a much bigger picture or a much better picture, but this will give you a ballpark. So let's go with a home price of $1 million, down payment of $100,000, so 10% down. We're gonna go with 7% interest rates. We're gonna go with property taxes. Right here in San Diego, 1% of the purchase price is going to be your property taxes. So we just took that $10,000, divided it by 12. Certain cities are going to be a little bit more. We always say budget for about 1.25%. Sometimes you're going to have some other things in your property taxes, but we just keep it simple here. Homeowners insurance, we went with about $3,000 per year. Now PMI, if you're putting less than 20% down, you are potentially going to have private mortgage insurance, which is an insurance policy that compensates lenders for losses from a mortgage loan default. So in this case, you are putting less than that 20%. So this number could definitely change, but let's just put in $100. We're assuming no HOA in here. And let's see where we are at here. So breaking it down, monthly payments are going to be $7,171. Now principal interest, that is just your mortgage, is going to be about $6,000. Your property taxes could potentially be rolled into your mortgage into an escrow account, so that might be paid in there. Also your homeowner's insurance, so all this might be paid with one payment. That's how we do it, is where our principal, interest, taxes, and homeowner's insurance all goes into there, and then the escrow account will separate it out. But you're looking at $7,171. Now let's just say mortgage rates go to 6%. We're gonna break that down. It's gonna be about $500, a little bit more than $500 less at $6,579. Now, if interest rates go all the way down to 5, you're looking just over $6,000. So the difference between a 5% mortgage rate and a 7% mortgage rate in this case is over $1,000, almost $1,100 right here. So what does this mean for buyers out there? So if you're a potential buyer here in San Diego, now's a good time to start prepping, get your numbers dialed in, get all your paperwork handled, keep an eye on interest rates, and figure out where you're comfortable with as far as that monthly payment. start your search from there. And right now, since we're going into the end of the year, so there's likely going to be less houses that come up, less. So if you're looking at Zillows, you're looking at all of that, you're going to see less homes come onto the market, but there's also less competition out there. And we're seeing a little bit more negotiating room from sellers. And if you are a potential seller out there, it's still not all doom and gloom. We're still seeing homes sell. Like I said, maybe market times are a little bit longer, but that pricing, that initial pricing that you're putting on your home is going to be super important. Where a few years ago, if your neighbor sold for $1 million, you might be able to price at $1,050,000 and still get a lot of interest. Now, if you price at that $1,050,000, people are going to see that the previous home sold for $1 million. You'll probably get some showings, you'll probably get some offers, but they're going to come closer to where people think the market is right now, which is going to be usually less than that. So we're not seeing as aggressive of offers. We are still seeing a lot of buyers out there. Even in the homes we have listed right now, we're seeing a ton of showings. It's just the offers are a little bit less as far as the number of offers. Buyers are being a little pickier right now, so just be expectant of that. Sellers, if you guys do want a snapshot of what your home is worth right now, there is a link right below. You can just click on that, and it's not an instant one, so you're not going to get an instant answer, but we'll get that to you within 24 hours and give you a good idea of what your home is worth right now. And if you guys do want to know what's happening in your neck of the woods, once again, that link is right down below. So go check that out, and we will get you over that market report for your specific zip code.